Dirty dealings, corporate battles, consumer wars. This is Evening 5. The US Federal Reserve's shift to interest rate cuts is said to bode well for Asian assets, as many are under-owned and have better earnings prospects and more room to benefit from easing than their global peers. Citing money managers and strategists, a Bloomberg report said the Fed's decision to lower its benchmark by 50 basis points is less of a gloomy view about the US economy and more about providing greater insurance for a soft landing. The pivot, it said, will help offset many of the negatives facing Asian assets, including expensive valuations, China's slowdown and growing trade tensions. Gary Dugan, CEO at Global CIO Office in Singapore, was quoted as saying, "The rate cut gives a clear signal to the financial markets, industrialists and householders that the Fed is supporting growth and that the action should be taken very positively by Asian markets." Meanwhile, a Reuters report said BofA Global Research raised its forecast for the Fed's anticipated interest rate cuts for the remainder of this year to 75 basis points, against its earlier forecast of 25 basis point cuts in the Fed's November and December meetings. It expects another 125 basis points of cuts in 2025 to bring the terminal rate to 2.75 to 3%. Rakuten Trade has raised its year-end target for the benchmark FBM KLCI to 1,780 from 1,730, citing anticipated improvements in corporate earnings and a more robust ringgit performance. Rakuten Trade Head of Research Kenny Yee said the total net earnings of the FBM KLCI's 30 component stocks this calendar year are likely to jump 16% year-on-year. For context, he said, based on the current 15.5 times price-to-earnings ratio on calendar year 2025 estimates, the index could potentially hover around the 1,810 level. Rakuten Trade has a bullish outlook on the banking, construction, power and utilities, real estate investment, trusts, technology and telecommunications sectors. Its top picks include Binastra Corp, Crust Builder Holdings, UP Corp, Kerjaya Prospect Group and OCK Group. The FBM KLCI finished 0.3% higher today at 1,665.65. The benchmark index reached its year high of 1,684.68 on August 29th, marking its highest level since December 14th, 2020. Meanwhile, the strengthening ringgit recently breached the 4.2 threshold against the US dollar. Also supporting the currency is the US interest rate cut. Rakuten Trade said the ringgit is currently undergoing some normalization and expects it to strengthen to the 4.1 to 4.2 range by year-end. Pharmaniaga expects its new biopharmaceutical plant to lift its gross profit margin to about 30 to 35% for the financial year ending December 31st, 2026. The plant, which is located in Puchong, Selangor, is operated by Pharmaniaga Life Sciences. The 300 million ringgit plant has an annual production capacity of up to 30 million doses of human insulin and will also produce other essential biopharmaceuticals, including vaccines and biosimilars. Pharmaniaga Managing Director Zulkifli Jaafar told the press that in terms of revenue, the group is eyeing 100 million ringgit per annum for human insulin alone and over about 300 million ringgit per annum for vaccines. The plant is part of Pharmaniaga's move to improve its position as a leading pharmaceutical group. A huge part of its business comprises government concession for pharmaceutical distribution. Zulkifli told The Edge recently that its distribution segment has a gross margin of around 6 to 10%. On its efforts to shed its PN17 status, he said Pharmaniaga now expects to secure Bursa Malaysia's approval for its regularization plan by next month. He said the entire exercise should be completed in February or by the first quarter of 2025. Datuk Sri Dr. Shahril Mokhtar has stepped down as Managing Director of Telecommunications, Media and Technology company Green Packet after almost a year in the job. He previously served as the Managing Director of Prasarana Malaysia and CEO of Mass Rapid Transit Corp. In a filing with Bursa Malaysia today, Green Packet said Shahril, 51, is retiring effective immediately. He was appointed to the role at Green Packet on October 16, 2023. At closing bell, Green Packet shares were unchanged at 3 sen for a market capitalisation of 63.3 million ringgit. Last Thursday, Green Packet announced that 4 of the 6 investors expected to subscribe to its private placement of some 598 million shares have withdrawn. To recap, Green Packet said on April 30th that it would undertake a private placement of 598.48 million shares, representing 30% of its issued shares at 3.2 cents per share, totaling approximately 19.15 million ringgit. The funds from the placement were intended to support its joint venture with the Sri Lankan government on an integrated tourism digital platform, a money lending business, and for working capital. Automotive components maker KHPT Holdings, which launched its initial public offering for the ACE market of Bursa Malaysia, said the company will remain focused on serving domestic car makers, namely Proton Holdings and Perodua for the time being. KHPT Managing Director Datin Eloise C said this is due to significant market share held by both car makers, accounting for 60% of the total industry volume in Malaysia. C told reporters this after KHPT's prospectus launch. The group has been supplying automotive parts and components to Proton for 29 years and Perodua for 24 years through their Tier 1 suppliers and manufacturers. In the prospectus, KHPT noted that its business will continue growing in line with the local automotive manufacturers. It has not ruled out the possibility of expanding its customer base to other foreign car makers in the future if such opportunities arise. Commenting on the rise of electric vehicles, C said the company is optimistic that its products will remain relevant for all car models. She also shared that KHPT is collaborating with local car makers in the EV space without elaborating on the details of the collaboration. KHPT aims to raise about 29.37 million ringgit via the listing, which offers investors a 27% stake in the firm.